Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day, welcome to the show. Excited about today's episode. It's a bit late, actually, and I do apologise, and you'll know what I mean in a moment, but it's not my fault. It's my guest's fault, so I'm going to blame him up front. Like most things in life, if you want consistency, you back this bloke because he'll always let you down.
All care, no responsibility.
All care, responsibility. Now, you'll remember, and I obviously really familiar here in the studio back 2 months late is Eric Brown, who you may remember last joined us on the 12th of February. Go and check it out wherever you're listening to this particular podcast. 12th of Feb, the heading of the podcast, so it's called The Appetite of Risk in a Development Game. If you go back to that episode, and I'll give you a bit of a cheat if you don't want to go back and listen to it. We spoke to Eric probably the third or fourth time as a series of conversations I've been having with him over probably 6 months to a year now around a development he has underway in the inner suburbs of Sydney, the suburb of Lilyfield. Lilyfield, for those who are not city-based, is sort of adjacent to Rozelle, which is near Balmain, the City Link. It's a stone's throw from the city. It's a growing suburb, popular with young professionals and young families. It's just got a tram line gone through. So it's a really attractive suburb, which hasn't moved at the same speed as what Balmain and as what Rozelle has moved at, but it's the next in line. So all the growth that we've seen across those suburbs in the last sort of 10 to 15 years has moved into Lilyfield, and it's had a pretty good run over the last 3 to 4 years. So Eric purchased a disused, I think by memory it was like an aluminium windows shop or something or other. Is that right? Yeah.
Window manufacturing.
Window manufacturing, right. With view to turn this industrial site into a set of townhouses, and he's had some challenges along the way. So what I thought we'd do is it's now been 4 months, February, March, April, May, June, 4 and a bit months since Eric was last on the show to get an update. And I'm happy to report that he's here and he's standing and he's weathered what was a storm.
Semi-smiling.
And I think he might be dyeing his hair because I don't see any grey in there. So it looks awfully suspicious colour. But I imagine he should have some grey hair because what he's been through and what he's kept me abreast of over the last number of months has been quite hairy. So how's it going, Eric?
Mate, I'm all right. I am over the hill, so to speak, in terms of the downward run for home now. So I think when we were speaking last, I was probably looking up a very sharp slope, trying to be positive, trying to keep it all real, but trying to be positive at the same time, because otherwise I just would have collapsed in a smouldering heap where I stood. So the good news is that we have approval for the warehouse conversion.
So we go back to the 12th of Feb, and I'm running off memory here. You were facing rising financing costs and really high interest rates, and you were quickly trying to find an alternative lender to help you hold the property as you went through this process of getting a development approval, a DA, which was being quite a headache. You were knocked back once or twice potentially from the local council, that's Leichhardt Council, notoriously challenging council to get I guess not cookie cutter type developments through, and a reason why is they like to keep the character of the area, and it's very sort of leafy green sort of space, and so you had some challenges there, but you got through it all.
Yeah, well, we were fast approaching. There's a date that happens 6 months after you are rejected, which the date is when it gets taken off council's responsibility. So it kind of means you can't challenge the decision anymore, and it becomes a hell of a lot harder to get anything through. So we were pushing closer to that date, and we went and saw some legal advice about taking it to the Land and Environment Court. I was at this stage, I think you remember, me and my beautiful wife had a bad cop, good cop relationship with the council, like our council officer who was in control of that. Of course, I was the good cop, you know me like that, Phil. So I was using my smooth talk to build a relationship with her in the hope that it would progress my relationship, and she kind of felt the sympathy play. I don't know if that worked at all, but the end result was when we told her we were going to the Land and Environment Court, it got pretty close. She rang me 2 weeks before and said, look, I'm really sorry, we haven't been able to make a decision on it. It's going to go to a planning panel meeting. You're going to have to submit this to the Land Environment Court so that we can hold on to the jurisdiction, and we believe it'll be sent in your favour. And then probably a week out of that decision, just before we submitted, because bear in mind that if you do submit to Land Environment Court, they then ask council for a request for information, which can be quite onerous and complicated, and council has to do a lot of extra work to come up with the paperwork and the information that the Land Environment Court will use to make a decision on that. So naturally, I think all councils are a little bit hesitant about, if they can make a decision, they will. If they don't think they can, they'll let you know. But for them to go through that whole onerous exercise is quite daunting. So I believe she was doing everything in her power to get that decision for us. And then a week before that deadline was up, she rang me and said, look, we can give you an approval. So
Okay.
Happy days.
So for everyone tuning in and they might be new to this series of conversations, what are you trying to do?
I'm trying to convert a beautiful old warehouse into 2 residential apartments.
Okay, and is it going to be whiz bang high tech?
No, not high tech. It's going to, I want to express all the original timber beams in there, and I want to make it light and airy, but I want to polish the concrete floors there so I retain some of the character. Some of the things that didn't get approved, I wanted a second car spot on the site, so I was trying to demolish part of the structure to fit a second car spot in there. Because we were applying under a adaptive reuse clause of the LEP, it was deemed that we couldn't really change anything to the external facade. So although then the decision afterwards came, well, how far do we want to push this? Do we want to put a Section 96 in and try and challenge that decision? Do we want to, push our boundaries a little bit more? I think we've kind of come to the arrangement that we're actually sick of fighting council, and it's still going to be an amazing development, an amazing premise, irrespective of whether we've got another car spot or not, and we're going to add a few additional skylights and trick it up. It'll be fancy, but it'll be old school fancy. So
are you talking like new loft style apartment type thing? Is that the idea?
I'm talking 4 bedrooms,
Yeah.
massive open floor space, both have private outdoor open spaces, one with an internal balcony that opens into the middle of the floor upstairs, because it's built on the boundary on 3 sides. So the advantage to us to develop that property was we got additional floor to space ratios, which we wouldn't have got if we had to knock it down and rebuild at, Leichhardt's 0.5 or 0.7 or whatever they're going to make the new rule at. So we got to build at, I think, about 1.5 as a floor to space ratio, which is pretty cool, but we have to maintain the existing envelope. And for that, problems with having buildings on the boundary are that you have to have fire rating. It has to be a fire rated wall, so it's very difficult to have windows on the boundary. So to get the light that you need to make the space habitable as opposed to a warehouse space, and we've had to come up with some pretty funky ideas like lots of skylights and atriums and internal balconies and stuff like that to really make it a funky light-filled space.
That's cool. So just before I move on, a couple of terms you're using that people might not be familiar with. LEP.
Local environment plan. I actually just know it by its acronym now. I'm not sure what it means.
What is it? What does it do?
It's a set of rules that lays out what you can and can't do for a development. So
guidelines.
Guidelines.
Okay.
Yeah. Well, rules basically.
Okay. And Section 96.
So Section 96 is go back to a Section 82A, which is the section we put in challenging council's decision when they rejected us originally. A Section 96 you use if you get approved for a development consent, but you want to change some of that conditions of approval. So maybe you want to add a window or increase the size of a window or add an extra car space. That's put in under a Section 96.
So anytime you deviate from the plans that have been approved, you need approval to do so.
Yes.
And that's a Section 96.
Yep.
So if you go, I want to change a window, and then I also want to potentially move a wall, a particular thing. Is that 2 different Section 96, or you can bundle them all up?
Cover them under one. Yeah.
Okay.
Any changes you want to make. I mean, ideally, it costs you money to put any type of application in, so you want to try and wrap them all up into one set of changes if you can.
Yeah, it's a lot of time.
You've got the option to go afterwards to take it to the Land Environment Court as well if you get refused on that. And then I guess after you've done your 96, you can also put in a Section 82A, which is challenging council's decision on that 96. So you can go round and round and round and round in circles. And every time you put an application in, of course, you've got to pay your town planner, you've got to pay your architect to make the changes, you've got to pay the fees that council require. So it adds up and up the further along you go, the longer it takes. And of course, you're paying holding costs the whole time you're doing that.
This is, so in terms of really good sound budgeting, as soon as you start deviating from the plans, it gets a lot more expensive. And that's where typically builds blow out And if you're building something to sell it, that's where your profitability blows out. But
so that's why I've decided not to challenge any of council's conditions of consent and just leave it at one car spot and leave the external cladding and say
it's not going to matter that much, right?
Won't really matter.
Okay, and just remind me why you're doing this. Is this to build it and flog it? Is it going to build it and keep it?
We're going to try and hold it.
Yeah.
We've got a strategy to build our wealth through property, through a passive income from our property portfolio. It's a long-term play. It's not short-term. We've mixed it up. We've got a bit of diversity in the portfolio. We've got some up in Queensland. We've got some blue chip assets in Sydney. We've got some out in Minto. So
Minto, I think you'll find it's called.
We've mixed it up a little bit, and I think it's serving us quite well.
Okay. So the idea is that you create this wealth while you're a bit younger, so at a point in time you can replace your income. Is that the idea?
Yeah, and I think we've kind of gone down a bit of an unusual strategy with the development side of things. We've done a couple before. This is definitely the biggest and the scariest we've ever done. And, as you listen to the other podcasts, you'll realise that it did push us out of our comfort zone. So I don't know if at the moment, my mentality is that I'll just sit back and let the dust settle for a while before I...
So this is the last one you're going to do like this, you
I'll
reckon?
say for at least 2 or 3 weeks, yeah, or months or years maybe, who knows. But risk appetite, I guess, got stretched to the limit, and I do have a fairly healthy risk appetite. But when it starts affecting your relationship, I guess you reassess how important it is to you to push a risky strategy. So,
and that's often the component of a development or any property transaction which doesn't get the emphasis that it should do, and that is the potential emotional, mental stress, turmoil, pressures that things not going your way can place, and it can transform the way you see this sort of stuff. And to your point, it can hurt other parts of your life, right?
Absolutely. Financial stress that comes from it is a massive burden on anyone's relationship. So I think it's really pushed us, and almost a breaking point a couple of times. Particularly when you think you're not going to get approved and you've run out of money, and it's stressful.
So let's recap on the numbers. Before I get there, are you worried about a softening Sydney property market?
Not at all. It's a buy and hold. I've got a long-term strategy, so I'm not worried at all. I know the rental market's quite strong. I think in the pockets that I'm looking at, like Lilyfield's pretty strong. We've had really exceptional growth over the last few years. So for me, riding out 1 or 2 cycles, I'm not so worried about the micro movements of the Sydney market, and particularly since I picked good suburbs to start with, I have no fear about being able to recoup what I'm doing. Of course, you're adding value you're adding equity by doing developments, so
So
I'm already ahead.
So what Eric's talking about there is the fact that if he's not building this to sell it immediately, then there's a lot less stress on ensuring that the eventual price, but the timing of when you sell this becomes a lot different. So if you're holding this for a number of cycles, whether you plus or minus 20 or 30 grand in the build cost right now, you can cop that, cover it for a period of time before it becomes something which is largely forgotten, right? Yeah. Of
course, no one wants to overcapitalise, so you always have to keep a tight rein on things. But I'm talking about more if the market softened and you say the Lilyfield market lost 2%, or say it lost 5%, whether that would actually contribute to my stress levels.
Well, you're not going to know if you
it won't, because I'm not going to sell it. So, but I look at property, I look at the prices, whether I'm selling it or not. It's still, but the prices still move, and I still keep abreast of those. But whether they worry me as much, it definitely doesn't on a buy and hold type strategy.
So, remind me, what did you pay for the site?
173.
1.73.
Yep.
Okay, so just shy of $2 million. And you've held it now for a year and a half, right?
Yep.
So it's just been sitting there,
doing nothing,
not generating any income. And you've held it during a period of time at really high interest rates for you, right?
Yeah,
So tell me about it, because that changed recently, didn't it?
That changed. We did some refinancing, and we secured some loans against our principal place of residence, which we weren't planning to do on the start of the loan, but we paid out a 10% loan, got us back to a 5% loan. But now the net result was we only owe $500,000 on that property. So the interest isn't really affecting us that much. The challenge moving forward, I guess, is whether we have the serviceability to lend against the equity in that property to do the development as a construction loan, not through a construction loan, and pay the interest along the way. but I think we have the capacity to that. But would it keep us at a stretched budget and keep a pressure on our financial contentment and our relationship? Yes, it would. So we're going down the path now of going to some non-bank lenders to try and assess whether we can roll the construction and some of the consultant fees, which are about 130 grand to get it off the ground from here, into a construction style loan. So with capitalised interest, which, you know, as your listeners will know, that means we don't pay any interest until after we finish the project, and then the rental return, we start paying interest, including the
So the interest you pay during that period just becomes the principal amount at the end of it. Yep. Okay.
And we've got some initial positive results on that. We have to structure it under a company, the lending under a company, because with the new rules coming out, it's a lot stricter.
So the serviceability requirements is different under a company structure than what is under a personal structure. Okay.
But of course, seek your property professional advisor.
Absolutely, we're not providing advice here, but it just gives some idea about the options available to you. So if you're developing property, get plenty of different opinions, because there is many different ways to finance a deal. So you 73 million for the property, and you're only holding about 500 grand of debt on that property now, right?
Correct.
Okay, so that's cool. So you've got, it's probably gone up in value, would hope, since you purchased it.
Well, say it stayed the same.
It's the same. You know? So you've got
very difficult to estimate the
value
value of the land.
$1.2 million in equity in that property right now. So you're going to borrow against the equity inherent in the property now to finance the construction costs.
So one option is to borrow against that, exactly as you said. But if it's not packaged up as a capitalised loan or a construction loan, then we need to pay interest on that from the moment we start drawing down on that. So the risk to our finance is that servicing that debt on top of all the other debts we're servicing, because we're currently living within a certain budget, that would put extra strain on our budget. So our idea is that if we have to pay an extra % more or 2% more, and we can either do a construction loan or do some sort of non-bank lending capitalised interest loan, meaning we not have to pay anything until after we've got our OC, and we've got 2 sets of rental income coming on that property, occupation certificate. And we've got 2 sets of rental income coming in that pay. It looks out from our numbers at the moment, looks like it'll be just slightly positive when we kick that over. So
that'd be a hassle, wouldn't it?
So cost us,
positively geared.
Yeah.
Okay. So 1.73 to purchase it. Whatever your holding costs have been thus far, it's probably a bit pricey.
Yeah.
100?
No, there's 100 grand worth of interest, 110 grand worth of interest, plus the rest. So
plus your DA, the process of DA has got to be in for at least 50 or 60.
Yeah, I think I mentioned it in the last podcast. I don't have my numbers in front of me, but it's all written down there.
So go back and listen to it, 12th of Feb.
Yeah.
You do the build. What's the build going to cost you? Thereabouts. I think we spoke about it beforehand.
Yeah, I'm hoping to bring it in around 1.2.
Okay, thereabouts. We'll go and check to see whether it's the same. It's gone up or down. Budgets fluctuate.
I think I was talking about $1 million last time, but I'm kind of just giving myself a bit of a contingency when I talk to the banks this time, just so I can, of course, to get the funding under that model, I need a signed contract with an independent builder. I can't do it myself. I can't do it under an owner occupier.
So what do you do for a living? What's your job?
I'm commercial interiors, a fit-out company.
Okay, so you're sort of in the building game, but you're not a residential developer.
Even if I was, I couldn't build my own place under these loan structures. The bank deems it too risky, so it has to be independent, third party.
And that gives them the confidence to give tranches of cash into a builder to satisfy the building.
The quantity surveyor, an independent quantity surveyor, has to back that cost estimate up, and it has to be scheduled payments. So you have to know when the money's coming out and how much money's coming out. They want all that stuff up front so that they don't, get a bit freaked out when big lots of cash start coming out that aren't accounted for. So it's all pretty much, it's all regulated pretty heavily, and obviously for good reasons.
And when you're all done, so it's 2 4-bedroom townhouses, all pretty cool.
Yep.
What sort of valuation? You've spoken to real estate agents, they give you some idea on what?
Yeah, we've got it. They're kind of saying 2.2 each.
Okay.
That was a fair while ago. That was at the start of the project. Rental return on them will be, somewhere above $1,200 a week.
Okay. So that's where your positive gearing sort of sits.
Yeah.
And gearing is positive. So positive cash flow is a product of how much debt you hold.
Yeah.
So, if you were doing this versus someone else was doing it, it'd be a very different outcome. It just depends how much debt there is and what the interest rates are and all that sort of stuff. Okay. So there's a bit of profit in there for you.
Hopefully.
Well, you're not going to sell it though.
Not going to sell it.
It's equity.
Yeah, it's not about the profit. It's about adding to that portfolio so that we're getting a bit closer to having the the number of unencumbered properties we need to provide the cash flow we need to stop working if we choose to.
It's a great spot where you are, and knowing where your other portfolio is, and it's pretty diversified, but you got some good assets in the Sydney area. You're set, right? If you can hold on to these properties, plus the other stuff you have in similar locations.
Yeah, it'll be interesting to see what we do.
They're good assets, right?
Yeah, it'll be interesting to see what we do next. I think there'll be some tough decisions coming out the backside of this as to whether we go down the development path again. And, I just said to you 5 seconds ago that I'm not going to do it again, but of course I'm in the midst of it and it's kind of stressful. And when I come out the other side, I'm pretty sure I'll look for my next shiny gold opportunity or rusty copper opportunity that I can shine up, or whether we look at other property markets. So I think that'll be quite interesting for me.
So you've been able to achieve something here that people prior to you haven't been able to do it, because when you acquired this property, someone had already given a bit of a punt to develop it, but they'd done it essentially legally, right? They didn't have the relevant DA to do so. So you've taken on a pretty big risk. Yeah,
we tried to mitigate that risk by talking to council prior to purchase and talking to my architect prior to purchase and talking to my funder prior to purchase, and actually trying to go as far as we could without borrowing the money or agreeing that we're going to acquire this at auction. But in saying that, the funder fell through right at the start anyway, so it wasn't as smooth as we thought it was going to be. And then it wasn't as smooth as we thought it was going to be going through council either. So you can do all the checks you want, but you have to be realistic that there's always an inherent risk in doing a project like this and with council involved. And even if you do your pre-DA and you sit down with them and they tell you that this is going to be, come through no problems, which is what happened with us. We submitted our development application, and we got back that council preferred us to knock it all down and build 2 cottages with the private open space out the back. And this was, opposite of what they said they were going to agree to in the pre-DA meeting. So technically it didn't make sense, but I think positively we did all our checks. We did as much as we could have done. And, if I had have done it all again, I don't think I would have done anything differently if I had followed the same process. And I wouldn't have followed a different process. I'd follow the exact same process, and I wouldn't have done anything differently because all the indications were leading me to believe that it wasn't going to be as difficult as it was.
So what is it then, do you think, when you look back at, and look, it's still a long way to go, but you've got your DA now and you've got permission, you've got a green light, right, to go. If you look back at getting to this point right now, what is it you think that has held you in good stead to realise this objective of getting the DA in versus how other people might have responded to the Act? A lot of people would have given up, right?
Yeah.
So what is it?
We were persistent. I think persistence is a dangerous word though, because you want to be smart enough to be persistent to a point, but I'd hate to be advising your listeners to be persistent against all odds and then, not recognise that something wasn't actually going to work. So it's not, I'm not saying I had a crystal ball or anything, but I think being positive and being persistent helped. I think communication with council, I think I was quite angry a couple of times in those earlier podcasts where I was a bit frustrated, and my wife had a kind of an aggressive, angry conversation with council, and in the hope that would move things along. It didn't work. So once I started communicating on a more of a personal level as the good cop, inverted commas, I just made that signal, it kind of did move things along a little bit more. And I think probably next time I would have taken it a bit more like a friendly approach. And maybe it's different for different councillors, maybe it's different for different councils. I'm not saying that's the right or the wrong answer. I'm saying that worked for us in this instance, and who knows whether that had any bearing on the outcome of the result, but I feel like it did. I feel like talking to them and trying to understand where they're coming from made a heap of difference.
Should have you given up?
No.
Were you ever going to give up?
Oh, I'd be lying if I said I didn't think about it. Yeah. But we talked about having an exit strategy that when we got our DA approved for selling the property, we thought about having an exit strategy before that if we didn't get the DA approved and selling it. But of course, when you look at the numbers or you go to the real estate agents and you say, hey, I've got an unapproved property, there's a council stop work order on it, what are my chances of selling it? And we've already attempted to put a DA and it's been refused. It was kind of a point of no return, right? There'd be no point trying to put that on the market because people had come through and just, discount the property because of the risk involved with it. So we had to jump that hurdle.
Do you think you got the, sorry to interrupt you, do you think you got the property discounted because of that, or do you think you paid over for it?
No, I think I paid about what was.
Or was
right.
that auction? So you paid what the market was willing to pay.
Yeah, I think we were hoping to go between 1.6 and 1.8. We would have stopped at 1.8 if it had gone over that. There still was a bit of money in it at 1.8, but we wanted to get it for 1.6 because we thought the risk appetite was. We know we have a bit higher risk appetite than most people, so we thought that a lot of developers would get scared off. It was pretty hot in the market at that time, though. I remember we missed out on a couple. We were realistic about where we were going to stop. We always are at our auctions, so we missed out on a couple when it bounced over the top of our allocated funding. But I think we got it for about right.
So what's the hard bits from here then? So you've got the DA, so you're allowed to commence building now.
No, now we've got to get we are allowed to commence building,
yeah.
Correct. We need a construction certificate before we do. There's a few hurdles we have to jump through to get that. We have to pay Section 94 contributions to Leichhardt Council, which is $20,000 a unit. So we need to give Leichhardt Council $40,000 because it's
for what?
For roads, private open space, parks.
Okay, so that's your contribution to the
Leichhardt area.
Leichhardt area, okay. And everyone has to do that. That's doing anything.
Yeah,
like
some
this.
councils are based it on percentage. Leichhardt's gone for a flat 20k per unit, and I think add that into your calculations because it's not going to get any lower.
So did you say for that money I want you to pave the street out the front? Thanks, and
no.
put a park across the road.
That's it.
Yeah.
No.
Okay. All right, so 40 grand, you got to pay that.
40 grand.
You got to, and you need to do that before you get your construction certificate.
Yep, we need to put bonds down on the footpath, which is about 10 grand.
You got to put what, sorry?
A bond down on the footpath.
What's that?
It's $10,000 worth of money. So if we stuff up anything, council holds that. If we stuff up the footpath at all, or the curb and gutter, they will hold that and then repair it and take money off us. We have to.
We've got to make it a gold pathway or somewhere like that. That's a lot of money. It's a bit of concrete. Anyway, okay.
We have to get.
So you give them that, you get it back.
Yeah, we give it back in theory.
Yeah.
We have to do asbestos reports. We have to get our stage 3 contam stuff done. We have to engage a private certifier. I've made a list. I use this product called Trello, and I've gone through the development consent and pulled out everything we need to do. It's about 60, 70 items. We need to engage a private certifier. We need to get him to sign off on the acoustic reports, the engineering reports, everything we've already done, pull it all together. So there's still a bit of running around to get it. But my main focus at the moment is securing that funding.
How far off is that, do you reckon?
Maybe a week.
Okay.
I've got a builder lined up, ready to go.
So builder's ready. Have you got a contract in place?
We're working on the contract. He's coming through with a price. I've worked out how much I think it's going to cost me. So if he comes in ballpark, we'll accept it. If he comes in under, we'll accept it. If he comes in over, we'll try and negotiate that down to meet our budget.
Okay. And what sort of contract you're entering into?
It's a fixed price lump sum.
Okay. So he's going to say it's going to cost X and you pay X.
Yep. And he'll say, I'll charge you this at this after demolition, this after carpentry, this after blah, 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 blah.
So if you don't do any, amendments or adjustments or variations is the right term, then he should come in at budget.
Yeah, absolutely.
So he's got all his margin factored in there, and
Yep.
so he'll try and do it as fastly and as quickly as possible.
Yep.
So he maximises how much money he takes from it. So it's a good incentivised contract for the builder, because then the better he does it, buying materials, using his labour, the speed at which he does it allows him to make more money. You get the benefits of getting something created quicker.
Yeah, so technically for an owner, sometimes a cost plus contract can work out better if it's a percentage of costs, because if you trust your builder and he can bring in the project cheaper than your architect and you believe, or he's quoted on it, then he only gets a percentage of that fee. So in theory, that can work out more. The banks won't swallow that on this type of project. They want a fixed price lump sum. So the builder has to factor in a bit of risk in everything he's pricing, because if it costs him more than that, he can't come back to you and say, hey, Phil, you know how I told you that was going to be $50, $500,000 for your driveway, and it's now $1 million, you need to give me $500,000 more. That doesn't work like that. On a percentage fee contract, less risk for him. He charges you less fees on the project because it's less risk for him. But if the costs blow out, you wear it as the owner.
Yeah. Okay.
But that's why the banks don't like that, because it's risky for the banks funding the project, and it could make the project unviable if the costs blow out too much.
Okay. So you get the funding next week, say for example.
Yep.
So that's a commitment from the bank to say that they will give you the money
Ready
to
to
build
go.
a property. So all the other stuff that you spoke about that you need to get done in order to start building,
Yep.
how long will that take you to do?
I'd say a month, but we're working on that already.
Okay.
Yeah, the architects are doing up construction drawings and finalising stuff and tinkering around with little changes, and the PCA's been notified and paid, and they're looking through the PCA's our private certifier,
Yep.
and they're looking through the documentation that we've already had prepared for council to get sign off on that. And once they issue us with a construction certificate, then technically we can start constructing.
And has your builder given you has he got the window to be able to build this thing?
No. I've got to give him sign his contract first to get going. Windows will be about 6 weeks away, I think. So, but there's heaps of stuff we can do to get going. There's,
Yeah.
we've got to change the roof around, and change the cladding around.
Will he do that or you do that?
He'll do that.
He does everything. So how are you going to not fall into, seeing that you are in a building game, are you going to fall in the trap of thinking you can speed things up by getting maybe your team to do it yourself? Or you're just
I
gonna stay
can't get
well away from
involved.
it?
I can't get involved in it.
No, at all. Okay, that makes sense. So what's your job then? Are you a project manager?
I'll project manage it. He'll,
Yeah.
as a builder, he'll have to do his own project management. I'll kind of act as a client side project manager in this instance. But
So is an architect going to be involved in it? Like, I imagine a lot of people will be sitting there thinking about grand designs, right?
Yeah.
And you see where things go wrong is where you get someone meddling in a building process when the architect should be... Because the architect essentially creates the blueprint, so they create the vision,
Yep.
and then the builder builds off the plans, right? So
Yep.
there should be a good relationship between the architect and the builder.
Absolutely. If you want to pay an extra 30, 40 grand, 50 grand sometimes, then the architect can project manage that project.
And are you
for
doing
you.
that? Are you going to get your architect to...
No, I'm going to do it.
You're going to do that?
Yeah.
Okay.
So
you need
save a bit of
to
money.
interpret the
Well,
plans.
yeah, we had a lot of input into the design intent, so I'm fairly confident that, and I know the builder, I've looked at some of his work before, so I'm pretty confident that he's going to build it with what we intended. So I don't feel that's a risky strategy for us at all, but I think for someone who wasn't in property or in construction, then that would definitely be good to have someone that sits between you and your builder. Because I've got the confidence and I can kind of tell, I trust him, but I can tell if he's, leading me down the garden path, and I can tell if he's not doing something the way he should, then of course I trust myself to be able to pick that up. But if someone wasn't familiar with that, I would say get a client-side project manager, get your architect involved. There's companies that actually can hire you a site manager or a project manager who sit above your builder and sit there and look after that stuff. So there's technical people that do that for a living.
Cool. So it's nearly all systems go.
Yeah, I reckon get me back in a month and we'll
We're going to
have
be
some
blokes
funding
hammering
and
nails
we'll
yet?
get
or?
ready. We'll be ready to hit the first hammer.
Okay. Exciting.
Not before the demolition party.
Yeah. All right. Not before the demolition party. That sounds all right. Well, happy, mate. Happy it's sort of moved into gear. It's taken a little while to get there.
Yeah, it has.
Yeah.
If you asked me at the start of this project, I would have told you half the time it's taken me. I'll be ready to roll. So
This is why you always need to have contingencies and allow for extensions of time. Nothing ever goes your way when you're building, I reckon. So just on that note, listening to what you've gone through and the depth or the just how complicated this process has been, I would say that most property investors shouldn't do what you have got yourself into. I think of everyone I know, and there would be only a handful of people who I think would have sophistication, be able to, and probably the resilience, to use your word, to actually go through this process. Most people shouldn't, as a property investor, touch this stuff unless you've got...
I agree. I would say if you're desperate to get involved with this, because you can make some extra money on it, start really small and do cosmetic stuff. So revamp your kitchen, paint it up, change your carpet, change your tiles, get a feel for it for that, and then do a couple of them and move your way up through that. And then for your first one, I'd employ someone like a developer for hire or a client-side project manager or someone that is familiar with the process and could guide you through that whole thing. I would just approach it with extreme caution.
Like, it sounds really cool in creating what you're doing in that, but it's a lot of risk involved.
Oh,
massive headache.
Stressful.
Really
and
stressful as well.
If we're pretty close, some of the arguments we had over the finances on it, they're pretty close to kind of putting a massive rift between my wife and myself. So it's serious shit.
Yeah.
Like, it's full on.
Maybe that's just because you're selfish and you're very toxic. But now I could become a relationship counsellor, but I'm not going to touch that whatsoever. But I know it's your fault, Eric.
Yeah, always my fault, Phil.
All right. Good.
Thanks,
Thank
mate.
you. No, enjoyed that. Any questions about what Eric's up to, email the team and we can even do a Q&A session with you, Eric. You'd be happy to come in and if people want to ask you questions about your journey, email the team, editor@smartpropertyinvestment.com.au. We'll curate a whole bunch together and we'll get Eric back in. Maybe that could be the next one, or we could do a part of it, a bit of a Q&A. He's used a lot of terms like LEP and Section 96 and OCs and all this sort of stuff. So a lot of terminology. If you go to smartpropertyinvestment.com.au, we've written a lot about this sort of stuff. So there is no excuse not to be informed when it comes to all this sort of thing. You just need to spend the time researching, understanding the game and the process. Yeah, you reckon a month or so? 2 months?
I reckon a month.
A month?
Yeah, I'm pretty confident. More confident than I was about getting the DA that we'll get the finance. That was the biggest leap, was we couldn't get finance until we had an approved DA. Now we've got an approved DA. It's there. You can do it. You just need to find someone who's confident enough to give you the money, or has a bank that has a risk appetite for construction loans. There's plenty of them around. You just need to maybe go to a second tier lender or a non-bank financing, or there's plenty of options.
There's lots of. Maybe we get your architect and builder in and can do the three of you guys, and I'll get you guys to fight each other. Maybe I'll do it at the start of the project and then in the middle of it and see how you guys are getting on as friends.
Do that.
Put a couple of beers in here so you start talking really what you think.
Bring some gloves.
Yeah. Good. All right, Eric, thank you.
Thanks, Phil.
Appreciate your frankness and your honesty when it comes to this, and I think it's something that everyone can learn from. You need to be quite self-aware and reflective when it comes to property investment if you're taking on these type of things. If you're not up for it, if you feel as though you've got chinks in your armour and you don't deal with stress well, or uncertainty well, or you don't like change, all these things, it's probably not for the faint-hearted what Eric is doing. But if you're wired a particular way, there's a lot of reward in property investment. But my view is that most people shouldn't touch this sort of stuff. It's potentially a massive headache. If you want to get in development games, a lot of easier ways to do it. If it's just building townhouses on a nice block or somewhere or other, right, it's a lot simpler. But we'll keep covering these things off. Remember, check out smartpropertyinvestment.com.au. If you like to get your stuff on social media, search Smart Property HQ. You can find us and like us and follow us and keep abreast of everything we're doing. And that's pretty much it for this episode. Quite a long one, but these are very popular, and I'll make sure Eric is back in the studio soon. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.